All right, welcome to OK Computer. I'm Dan Nathan, joined by my good friend and just stock market extraordinaire. That would be Gene Munster. He is the founder and partner at Deepwater Asset Management. Gene, welcome back to the pod.
It's amazing to be here. Thank you.
Yeah, and I don't say that lightly. I mean, you actually have so much range. I mean, I got to know you as just the Apple analyst extraordinaire, but as you have moved into asset management, I think your range has gotten so good, and I really appreciate you talking to us about all the things that are on top of mind for you. Just what's on top of mind for us today in this pod, we are going to preview Nvidia's earnings. They come out Wednesday after the close. By the time you're listening to this, it'll probably be Wednesday morning. We're going to talk about just what we heard from their biggest customers the last month in the Q2 earnings cycle and really what it means, their CapEx for Nvidia. We're going to talk about, just this kind of LLM race that a lot of these folks like Google and Amazon and Microsoft are involved in. And then we might hit a little Tesla for shits and giggles. And lastly, we're going to end on the September 9th Apple Glow Time event. It's going to be massive. You'll probably be out there. I can't wait to hear that. All right, Gene, let's talk about Nvidia. 10% implied move in the options market. That is probably one of the larger implied moves for this name over the last sort of year or so. And again, they've had some huge moves post earnings. I think that expectations are high. They've always been high. So I'm just curious where you're coming in on this. At least seems like a lot of folks are like viewing this again as a sort of macro event for the markets.
So the street consensus are for 111%, to be exact, year-over-year revenue growth for the July quarter. I think they probably have about 5% upside there, which would get you to just about 125% year-over-year growth. Now, that's been decelerating, of course, but the piece that has surprised me over the past day as I start to look forward to NVIDIA's earnings is that despite rumors about the Blackwell delay, which I believe are true, I think that their expectations are now that they will beat, like I just said, and also raise guidance for the October quarter, which that's a really high bar, and that's probably what you're seeing in some of that option market. It's just a very high bar, and I'm kind of thinking going into this about kind of the near term, what's happening with the stock, and then of course the long term. That's generally the framework I use, but this quarter especially, I think there's just going to be a lot of intensity in the near term just because expectations are so high.
Yeah, and so it's interesting. So you're expecting 111% year-over-year revenue.
That's the street. I think it's going to be closer to 125%.
Well, I mean, listen, if it comes in at 125, that's good enough to keep this stock going, even if they were to kind of have cautious guidance for the next quarter, right? So you're expecting 111 this quarter, and it decells to 76% next quarter. One thing that's interesting from their fiscal Q2 last year, they reported 102% revenue growth, and then it kind of escalated to 200% in Q3 and 265% in Q4. And I think that's what you're getting at is some really difficult comps going forward.
Nasty comps, yep. And maybe to put those comps into context is that the street's generally looking for, we'll talk in calendar years, but generally looking for about 100% growth in calendar 24. That goes to 38% in calendar 25 and down to 16% in 26. And at some point, the law of large numbers catch up to you. And I think that that's generally where investors' heads are at is of that kind of slope. I have a view that these numbers in 25 and 26 will be measurably higher. I'm most optimistic about what's going to happen in the next couple of years related to NVIDIA's business and how they're going to be building all this out. But I mean, that's kind of the context. And if I may just kind of to jump through the what's on my mind going into this is obviously the numbers are important, but the language that Jensen has around demand, supply-demand equilibrium, he typically doesn't use supply-demand equilibrium, but he'll talk about how long they have until they will reach supply-demand. And in the April quarter, he talked about that being end of calendar 24. And when they reported in the quarter previous to April, I guess the January quarter, he said it was going to be end of 24. In the April quarter, he talked about that being early in 2025. I mean, if he says that we're going to be supply constrained until mid 25, for example, that's going to be viewed as very positive. If he says it's late 24, that's going to be a big problem. So I think the real crux of how the stock is going to trade is going to come down to that language on the earnings call.
Yeah, and you mentioned this, I think, at least the last time we spoke. You said that the transition from the Hopper to the Blackwell is probably the most important thing that is on your mind. Now, you are a shareholder at Deepwater, just to be really clear. And so you see, and you laid it out really clearly, I want to say a month or two ago, how you just have a very long-term view on just the outlook for not only this company, but as it relates to generative AI, it's going to be an arms race for years to come. And I think what we've seen over the last 18 months, this is my view, is that when you see a company like this, which is the only supplier of arms, right, and they've seen their margins go up because they have so much pricing power, right, and you say to yourself, where's the competition? It's nowhere to be found right now, right? And so sooner or later, though, you're going to have a little bit of a slowdown. When we think about some of the CapEx gains that we've seen, they've decelerated from some of their biggest customers, right? The numbers are larger, but the way that they've been adding to the price, does that make sense to you a little bit?
The incremental
Yeah.
increases are getting smaller.
Yeah. And so, the stock market has afforded them the opportunity to continue, spending at this pace. And, I've heard some things, maybe it was Sundar or Larry Page or one of these guys is like, they can't spend enough right now because the idea that they will be left behind, you know what I mean, as
Yeah.
everyone's moving towards a supercomputer that will do everything and anything, there just can't be one provider of those sorts of services. I think all these folks kind of know that. But at some point, the music's going to stop, at least in the near term, Gene. Does that make some sense?
The music will stop related to, again, as investors in Nvidia, the way we think about this is the next couple of years are going to be better than what people think. But eventually, the music stops in the sense that the growth rate comes down to a point where it's just not attractive. And I think that the market is kind of thinking, what's the guidance for next quarter? There's this pins and needles, almost this uncomfortable denial of what's going on. And what's going on is what you just described: is that the cost of not investing for these hyperscalers is getting blasted into oblivion. And so I think that ultimately, Nvidia, Micron, all the hardware companies that have done great are going to have a reckoning. And the question is not when that's going to happen, or is that going to happen? It's when that's going to happen.
Yeah, and I want to be really clear. So just so I don't sound like a newbie or whatever you want to call it. So there's two ways to think about that. There's like the open AIs and the Google that are training these models, right? So they need all this compute, right? And so they're putting these H100s into servers that Dell are making, and then Micron is using a lot of they're using a lot of Micron's memory, right? And those servers are going into data centers, which are basically all that compute is used to train these models. But at some point, you get to this inference phase where, you need less of the kind of, the spare parts, right, to go into these servers and data centers. But again, the whole upgrade cycle, as you're trying to kind of scale this technology, right, you need to continually add to the level of compute, right? And so that's the thing why I think a lot of folks like you just think this could keep on going and going. So you have those that are training the models, and then you have the hyperscalers. It's the Google Cloud, the AWS, the Microsoft Azure, which is actually providing all of these services to enterprises that don't want to spend on their whole thing, right? So just kind of, if I didn't lay that out correctly, like help me out there, like thinking about these two different business models.
No, you nailed it. I mean, there's little that I can add there. I think that was well framed in. You've got the applications, the service providers, and then the hardware. And we're still in the phase of putting down the tracks. Everyone is aware that we're in the phase of kind of building the infrastructure of this. The question comes down to, again, is it going to be faster for longer? That sounds like Chairman Powell here talking about interest rates, but it's the same concept when it comes to Nvidia and these hardware companies. And ultimately, I'm in a belief that AI's impact is going to be more profound or will exceed some of the hype that's out there, which is a pretty bold statement. And I think an uncomfortable, I'll call this an uncomfortable truth that I believe about this AI is that the market and these companies are just going to keep going up. It's uncomfortable because it feels like we have to take a breather, we have to be near the end. And I think the reality is we're still 3 to 5 year bull market here ahead of us that is going to be powered by AI.
Yeah. I mean, I guess the thing that, when I think about the technology, and particularly in the public markets, is like we know that there's basically 10 stocks that have been benefiting from this, secular trend. And so I guess if you're going to say a 3 to 5 year bull market, then we need to see some demand for these products and services, right? From essentially all these different companies in different industries, right? And so right now, where I'm a bit skeptical is I just don't think the use cases are going to be, there's not going to be a good ROI for a lot of companies in the next, few quarters, or maybe even the next couple of years. And you and I have talked about some of the examples of a lot of companies who are trying Copilot or testing it and the like here. And if they can't really find the use cases right now, I suspect they're not going to find them for a couple of years. And, when you talk about a bull market, which, clearly we are in for those 10 stocks, and it's kind of helped the major indices. It brings me to a quote that I know that you probably, are familiar with, from John Templeton, legendary hedge or mutual fund investor. Bull markets are born on pessimism. That would be 2022. Grown on skepticism. That would be 2023. A lot of folks just were pricing in the potential for a recession and couldn't really find the things that kind of re-energize investors. Clearly, that was AI. They mature on optimism, which is what we saw in basically early 2023, right? Until Nvidia started blowing it out of the water in the back half of 2023. And then they die on euphoria, right? So it's bull markets are born on pessimism, grown on skepticism, mature on optimism, and die on euphoria. Now, you tell me, we're either in the optimism phase, right? Or we are very near the euphoric phase, because a lot of investors cannot see how Nvidia could disappoint right now. And just the last thing I'll say is that Amazon, Microsoft, and Google haven't made a ton of ground back since they reported earnings and, most importantly, announced their CapEx about a month ago.
So a couple things. First is the end of this conversation is, let's say in 1 to 5 years, is going to end with a bubble bursting. And we can debate whether we're in the bubble right now and the bubble bursts when NVIDIA reports their quarter. But at some point, there is going to be euphoria. I don't think we're at euphoria now, because I think that there's just still a healthy conversation. I think what you just described, the number of use cases around generative AI is still relatively limited. I want to just jump into that in a second. But first, I want to just acknowledge that I'm in agreement that we're going to have, this is going to blow. It's going to be a very painful blow up. But between now and when that happens, I think that there's an opportunity for wealth creation. The topic around, like, what are we actually seeing? Like, what if this is really true, that AI is going to be this transformative? Well, then we should have lots of examples of how this is impacting our lives. And this is the part that I struggle with, because we don't have lots of examples. We've got Klarna, which is a European buy now, pay later company that's trying to go public and tell a good story, a few months ago, talking about how they saved 700 agents, did the work of 700 agents. We've talked about that before. And then last week, we had the CEO of Walmart talk about some work that they've done on their catalog. And the rough numbers were, it was like 850 million items that they cataloged in for 1/100th the cost, or there's 100x improvement in efficiency around how they did that. Powerful use case coming from the CEO of a real company, but there's still few and far between. And I think that it feels to me like we're in 1995. We've talked about this example before, but 1995, we could talk about how some of the implications that the internet could have. We could guess that we could have Netflix and streaming music and video. We could understand that social networks could be born because what was going on messaging. But it would have been really difficult for us to understand the impact of Google at the time, the power of a $1 trillion plus search business, and next to impossible to understand how the internet would power the smartphone. And so my point is, I'm choosing to believe in the strength of intelligence in real time, and then that ultimately is going to prove these use cases. But there's a leap of faith to get there.
Yeah, I guess the point that I would just make is from the highs, for the Nasdaq Composite in early 2000 to the lows in, 2002. The Nasdaq lost 77% of its value. And if you say to yourself, okay, well, 1995, the S&P went up 30% a year for 5 years until it topped out. The Nasdaq clearly hockey sticked from late 98 to early 2000. And, again, there was a bubble there. It. I know it. Everyone felt it at the time. No one could tell when it was going to burst. And so, again, I think the narrowness of this rally, of this bubble, should be kind of concerning, because when Nvidia lost 35% of its value from its highs a couple months ago to its lows in August 5th, just think of the value destruction. Now, granted, it had a V reversal right back, but this is a $3.1 trillion market cap company that lost nearly $1 trillion in value. Now, at some point, it's not going to come back in a month. It's going to go down further, and it's probably going to get cut in half. And I don't know whether that happens this year, next year, or in 2026. I just don't know. But at some point, and no one's going to know, it's going to be a huge value destructor from a very high level. You know what I mean? And, we saw this in the highs of 2021 to the lows in 2022. There was, and you and I've talked about it, Nvidia lost 75% of its value. Netflix did, Meta did. I mean, it's really shocking when you think about it. And the fact is, we're 3 or 2 years later, and no one can conceive this, because this trend is so much bigger and better than what happened 5 years ago or 25 years ago.
I agree. I think this there is more substance here, and I think we're generally on the same page too. This narrowness in the market, I want to just talk a little bit about that too. Is that I talk about a 3 to 5 year bull market. I was specific about that, not talking about a 3 to 5 year great for a select few of companies that are participating in this. And so that's a pretty bold statement to believe that ultimately all the things that we're talking about, all the benefits that we're talking about, are going to creep down into across the market and improve efficiencies, improve earnings. I mean, this is in the matter of 3 to 5 years. I mean, that is potentially a reckless prediction. But I think that's what needs to happen, and I believe that will happen. I think we're going to see. We don't need to see margins going up by 15, 20%. I think if AI can just show a fractional improvement in margins, I think the market will kind of impute and take it higher. But ultimately, the substance, we've had a lot of talk, we've had a lot of hype, but we need to start to get to the substance in 2025 about some more use cases. I agree. We need to see more of those things that Walmart and Klarna were talking about.
Yeah, and I'll just say this lastly, that there needs to be a phase of pessimism, you know what I mean, before I think these companies can materially go higher, before we have $5 trillion market caps. I mean, that's just my, 2 cents, but who knows? All right, I want to play this quick game with you. You know it. It's from Fast Money. It's called Would You Rather. I did it last week with Dan Niles of Niles Investment, and, it was kind of interesting, and I'm not going to tell you what his answer is until I hear your answer. So I was saying that Nvidia and Microsoft, they both have a $3.1 trillion market cap. Nvidia, obviously you went through their growth rates, 100% this year, expected to decel, let's say, to 40% for EPS and sales growth. Okay, 120 billion this year, expected to go to 170 billion next year. Gross margins about 75%. Okay, and then they have about $68 million in net income. All right, so here's Microsoft, same market cap, expected to grow earnings and sales for the next few years, basically mid-teens. Okay, and that gross margin is below that Nvidia, but we could all agree that Microsoft's a lot more stable at 68%, 300 billion in revenues, and expected to have about $100 billion in net income. So the question is, would you rather? And let's think out 1 year, like what would you rather buy right here, right now?
It's an easy one for me. It's Nvidia. I think that what we're going to see, and we may not see it when they report this quarter, but I think what we're going to see over the next 2-3 quarters is going to be this continuing of a breathtaking increase in their business. And those numbers are amazing. That 170 billion estimate, a couple of years ago, they did 20 billion in revenue. I mean, this is like orders of magnitude, just mind blowing. So mind blowing, it's hard to imagine that this would be my pick. I mean, I think common sense would say that's just unsustainable. But I think what's going on with AI kind of defies common sense. The second piece is related to Microsoft. I think that's if you're going to ask the question, 5-year company, I think Microsoft's in a better place. But the next 1 to 2 years, and that's where our portfolio is. We don't own Microsoft.
Yeah.
We own Nvidia.
I like that answer. It's fairly nuanced, and again, I mean, as an investor, you have to kind of think about multiple different time frames. You know what I mean? How you test this thesis. So that was great, and I'll just give you a quick, response to
Can't
what
wait.
Dan said. Dan said both. He goes, "Why not both?" And so, I like that. What I said is that if things get particularly pessimistic, I think you just buy the NASDAQ 100, the QQQ. And, why, because again, and I don't know if it's going to remain this way, but the top 10 stocks that are all exposed to this secular trend make up 50% of the weight. And then the other thing is, if you're going to see it broaden out to different industries, right? All the other 50, you know what I mean? Or the other 90, the other 90 should benefit from whatever gains that the productivity gains or efficiency gains or whatever. So again, you don't have to take the idiosyncratic
I like
risk of
that,
one of
by the
these
way. That's a
names.
safe way to do it.
Yeah. Well, I mean, like that's the play. And then as you work it into retail, Walmart and the like here, I just don't think some of these retailers are going to see any meaningful benefit. And just think again, going back to the internet, that a lot of folks thought was easily going to be, one of these, technology shifts that is going to change the way that so many different industries do business. You can still have a bear market in the stocks with progress of the companies going to that disruption on a mass scale, but it just took a while. You know what I mean? If you think about it, right? So again, all right, let's move over to Apple. Let's talk about this event that was just announced. You and I have gone back and forth between, what we think is going to happen with Apple Intelligence. I'm just in the near term less excited about it. I don't think it's going to cause some massive, upgrade super cycle. You feel differently. You were so right. Going back to June 10th at WWDC when they released, basically the plan of what Apple Intelligence was. The stock literally from the day, and I was a little glib on Fast Money, the day that it came out, and you were like, this is a game changer. The stock literally went up 10% in a straight line after that event, after you said that. So how are you thinking about it heading into the event where the stock has acted particularly well on a relative basis to a bunch of those other names that we just spent some time talking about?
It's kind of a little bit of a flip flop of Nvidia. I was saying Nvidia, feel good about it in the near term, the next year. I think Apple hard to play how this kind of the September quarter and how kind of expectations about the new iPhone play in the near term, because we've had a move here. I think if we look at over the next 4 quarters, I think that there is meaningful room for upside. And just to quickly put some context around this, is that the street is looking for 8% revenue growth in calendar 25, 8% in calendar 25. I think it's going to be up 2% in calendar 24. So it goes 2 to 8 for Apple, who's been struggling for growth for the last couple of years. That's a pretty big acceleration. But around that 8%, it really comes down to is what your temperature, what your belief is in these features getting people to upgrade. And you have a view, I have a view that I think when people start to get these, I think that there's going to be more excitement. And I just want to put some numbers around it. The rough numbers are they have about 1.3 billion active iPhones. Average upgrade is just over 5 years. So that means that they sell, call it roughly about 250 million upgrades per year in general. The street's currently modeling for iPhone units to be up 20 million from calendar 24 to calendar 25, about almost a 10%, just under a 10% bump up. If you look at the other 80%, so let's call it 20% would upgrade, a little bit more than 20%, the other 80%, and just focus in on the year that would be coming next year, those people who are 4 years out. And if 10% of those, if 10% of that group, that cohort, next year's cohort, decides to move forward and upgrade, the iPhone business will grow at about 15%. And so from my view is that it doesn't take a lot for that to happen. Now I want to give the analogy. What happened is a decade ago, and this is going to test Apple historians here, the investment historians. When the iPhone 4 came out, stick with me for a minute here. When the iPhone 4 came out, there was a lot of excitement about iPhone 5 and about it was going to be their first true bigger iPhone. And when it came out, it was actually just marginally bigger. and consumers really didn't bite on it, and so it didn't do that well. And it grew at 12%. The iPhone 5 cycle grew at 12% over the 4S. And when the 6 came out, they came out with the 6 Plus, which is truly a big phone. It looks small by today's comparisons, but it really caught the eye of consumers. And iPhone growth went from 12% to 51%. That was an example of people that are 1-2 years out from upgrading saying, I want this a little bit earlier. Now, are the AI features enough are they as powerful as a bigger screen was a decade ago? I think that they are. I'm not suggesting that we're going to have 50% iPhone growth, but I think that on the margin, it doesn't take much to get iPhone to show some upside. So ultimately, to answer your question, over the next year, I feel really good about this. I own the stock personally. I think that these features are going to be must-haves for consumers, and time will tell.
I mean, if you look at the consumer uptake of OpenAI and ChatGPT in particular, it's just not great. And I just don't see, Apple customers spending $1,100, $1,200. And I get it. You can kind of put them over 2 years and, the Apple upgrade thing. I just don't think this is going to be that interesting. And I also think that, like they're not going to have all the whiz bang sort of features when this thing ships. And so I think it's going to get pushed out into this quarter, probably into Q1 calendar next year or Q2, which is also a seasonally sort of weak period. And people are going to start thinking about the 17 at that point, So if I think about the growth that they've had in iPhones, low single digits, right, over the last couple of years, I think people are becoming less interested. I get it as far as their market share here, but I think they're becoming less interested in the upgrades. When you tell me that the 5-year is like at that point of the average upgrade, that tells me that people don't give a shit about what they come out with incrementally. And if this Glow Time event is going to be featuring basically Siri and the advancements there, well, most people have a very negative view of Siri and will remain very skeptical of it. You know what I mean? So I think this is going to be a 2020, late 2025, 2026 thing, but who knows? And the last thing I'll just say about those comps, I mean, they're easy comps, you know what I mean? Like on the iPhone. So it'll be interesting to see how it all plays out. I'm just not that optimistic, but I am not the analyst that you are. And I know you've been thinking about all these upgrades every year for 15 years. And that pattern recognition, you going back 10, 12 years, I think is very useful when you think about this company. So that's my 2 cents. I mean, you can have the last word on Apple. How's that?
Appreciate that. And I think this is going to be a fun year. Either way, it's either going to catch on and the stock goes up, or consumers are just going to kind of roll their eyes and the stock's going down.
Yeah. I'll just say the last thing, because yesterday when we were processing the CFO, Luca, you've listened to dozens of conference calls that he has basically been the highlight of, even when Steve Jobs was on. When I say the highlight, the guy really driving the train, right? And then you think about, I just kind of looked at it. I know that this number was staggering, but they have returned nearly $1 trillion since they started their buyback in 2012. And so I think the number is, in dividends, maybe it was close to 200 billion, and the rest is buybacks, or maybe it's a little more, but I think the combined number is like 900 billion, which is truly amazing. But it also speaks to just the lack of growth that this company has had on a year-over-year basis from an EPS standpoint. They've been managing their earnings massively, and at this stage, at $3 trillion in March. So I said I was going to give you the final word, but I promise you I'm going to give you the final word. But when you think about it, I mean, they just announced, and people got all geeked up about this $110 billion share buyback on a $3.1 trillion market cap. It's kind of like a rounding error.
That's definitely a rounding error. I think what was not a rounding error of the last decade under Luca's eye was that gross margins went from about 37% to about 47%. Yep. And I remember when they were getting into the mid 30s, people thought that couldn't go any higher. I don't think that they're going to go to 60% anytime soon, but I'm just optimistic that I just give him credit for a salute to Luca and Apple finding a way to keep him around.
Well, I'll just say this. Even if these iPhones are just incremental from a hardware standpoint from here on out, and they can really figure out a service model around generative AI on the device, that is the thing that gets you from, mid 40s, right? Gross margins
That's
to something
yeah,
near
that would
50.
be it.
And I get that. And then it would justify margin expansion. So I'm with you. It'll be interesting to see how this is perceived when they kind of launch the device, and what they're highlighting is sort of the services. Last thing I'll just say is that, with the dollar, as weak as it is, you know what I mean? That's great for multinationals. But, in places like China, it makes those iPhones really expensive, right? When
Yeah.
you think about it. And then the other point is that, this 16, when it ships in China, is not going to have all these great features on it because of when you think about, Chinese control over these
Yeah, we
consumer
gotta
products. Yeah.
I'm put a 30% chance we hear something on September 9th on that. I think it's less than 50, but I think there's a
Yeah.
measurable chance. They got to announce something. We've talked about Baidu in the past. That's the odds on favorite. That's got to happen.
Yeah. Well, I just think if you're looking at PDD, which is obviously the owner of Temu, I mean, the Chinese consumer is weak. If PDD
Hmm.
on such a low price point of their retail offerings is missing and guiding down, that does not sound like a good thing for a Nike or for Apple or for Tesla. So let's go to Tesla here. And talking about margins, I get an email from them, it seems like every few weeks, how they are trying to buy down rates to get people in these cars, okay? And when you think about just kind of all the volatility that we've seen in and around demand and competition, XPeng just like announced a $19,000 car that has like triple the range of like a Model 3 or something like that. And then you think about all these tariffs that are being placed from Canada, from Europe, what Donald Trump is talking about as far as a trade war or an increased trade war, and doing away with the tax credit. I just have to think that if the tax credit were to go away, first of all, I just don't, I don't know what's going to happen with Elon and Trump have cozied up together on that front. And Elon has flip-flopped on tariffs as it relates to China, which is really curious to me. And then I just think about the buying down of rates, what that means for margins. And everything that this company has done in the last 2 years to stimulate demand has failed. And it's seen their gross margins go from 25% a couple years ago to now expected to be, 17 or something like that. So give me your 411 on Tesla. I know that was a huge dump there, but just
No, it's good.
yeah,
I'll maybe start with the highest level, as I was wrong on this. I was wrong on what EV demand would look like. And if we rewind the clock and go back to 2021, so from 21 to 2030, it's actually 10 years in there. It sounds like it's 9, but it's 10 years. I made a prediction that half of the vehicles in the US will be electric, half the new car sales will be electric by 2030. And so we're sitting right now, it's just about 9% more recently. And later this week, we're going to kind of roll out our new numbers around that. And the catalyst on it has just been I guess the straw that broke the back was Ford's commentary that they are delaying this vehicle, this SUV, indefinitely. They still want to do it, but electric. And then Stellantis talking about slowing down some battery production. And you kind of put that into context, what's been said across the board, and look at what's happened with EV growth rates going from around 40% ish in 2023 down to it's probably going to be up like 3%, something like that. So I was wrong on this. Just a starting point is that we're in an EV winter right now, and the question is kind of the shine off of EVs. And Dan, we've never talked about this, but I love working with my hands. I love working outside, and I have. I have like power equipment tools like chainsaws and lawnmowers, and I own 2 lawnmowers and probably 4 chainsaws. But I look at what's going on in always the electrification of those products. And I've noticed is that the manufacturers on those have totally backed away from electric. And so it's not just cars. It's like the appetite was satisfied by a certain percentage. And now we're in this period where I think it's in this dark winter. And I'm still convinced, I mean, we're going to come out with new numbers. I'm still convinced that electrification is the undeniable truth where we will end with when it comes to transportation. That time frame is going to be, we're going to debate that. But I think just as a starting point, I want to just acknowledge the obvious. And the question for me is, at this point, that train has left. I mean, we are in the winter right now. The question is, when are we going to get the thaw? And I think the Wall Street Journal is reporting on some of the changes to Ford and some of the mistakes that they reported on that Ford had made, kind of trying to do these bigger vehicles. And the reality is that the efficiency in the batteries, given the size of it, doesn't really add up to a product that consumers can buy. And so all the trend and drift to consumer buying has been to bigger vehicles. And this is what's going to test the EV market over the next couple of years. Is Tesla in October is going to announce a couple smaller vehicles. One of them will be autonomous. One of them will be smaller. And it's going to test, is there a market for some of these smaller electric vehicles, call it sub $30,000. Average price of a new car in the US is $45,000. And so I'm of the belief that we're still going to return. I still believe in electrification. And I think that as we see more of these smaller vehicles start to come out, we're going to start to see that bump up. Now, with Tesla specifically, you gave me the opportunity of a lot of things to go through there. Just to finish one other piece on it, is that I think it's important to note that not only is there what's going on with the EV winter, there's also this dynamic of what Elon is talking about getting maybe becoming more political and how that could impact demand. And then you also have this timing piece of whatever they're going to announce. It's not going to come out when they said early 2025. It's probably going to be late 25 or early 26. And so I'm a Tesla shareholder, continue to believe in electrification, believe in autonomy, but I'm like hatches buttoned down for the next 2 quarters because I think there's some headwinds that got to blow through before I think we get to some clearer sailing.
Yeah, I know he was pretty disappointed by the Biden administration a few years ago when they were really leaning into, Detroit and the automakers there. And, let's just say Harris wins. I don't think it gets any better for him. You know what I mean? And then as it relates to, just the government and how they work with him. And I think that, ironically, I think the credits stick around. But if Trump were to win, the credits could go away. You know what I mean? And so I just think that's an interesting dynamic. And the last thing I would add about the low end is like they seem to go all in on robotaxi, in place of this focus on the low end car. And robotaxi is just push that out. Whatever you think about, you know what I mean, like where they're going to hit the ground running, in my opinion, and you know a lot more about this. But then on the low end, if they have a $30,000 car, that's still much more expensive than a lot of the stuff that's coming out of China. And when I think about China, I think about, 50% of Tesla's cars that are sold come from Shanghai. And a bunch that basically don't get sold in China go to Europe. And Europe just announced tariffs. And then I think a Chinese consumer has a $20,000 option that's probably far better than a Model 3. And, I've driven in a lot of Model 3s, not that I've driven them, sat in the back seat because they're being dumped on Uber drivers. They can't give these things away in the secondary market. And those are really shitty cars, Gene. I mean, they rattle. They feel like shit sitting in the back of them. I just don't think they're like great quality cars for their price point. So to me, I think it's going to take a couple of years for Tesla to get out of this thaw. Last thing I'll say about China is they've dropped to number 6 as far as market share is concerned, right? And so I don't know. I just don't see them coming back. And I think the Elon thing is an X factor that, you see what I did there? X factor that I just don't think is going to benefit. Last thing I want to say, last night, I want to hear your take on this. On Fast Money, we were talking about Boeing and they're just failed, like the massive failure was Starliner, it's called, you know what I mean? That sort of thing. And the SpaceX thing is going to have to go rescue these poor astronauts who are stuck up there for months. I mean, why doesn't Elon just drop the Tesla and drop the X thing and just go be the CEO of SpaceX? Because when you think about the TAM there and you think about the domination or the market share that they have, there's no competition. Like this could be a $1 trillion market cap in 2 years. It could be, a $5 trillion much quicker than, any of these other companies that are exposed to generative AI. I don't know. That's just my 2 cents.
I think Elon loves Tesla, and I think he loves the community around him. I think he loves that all that has provided, just like intellectually stimulating. He obviously doesn't need to work, and so I think that's one of the reasons why he doesn't just focus. He's of course has a lot of companies, and I think it's unlikely that he would just focus on one of them, for example. But at the end of the day, is that has a strong belief in autonomy, he has a strong belief in electrification, and I think that this pay package thing seems to have been squared away, and I think that he's going to be around at the company for a long time. And I continue to believe that with all of his flaws, I think he still is a huge asset for this company, at a minimum for being able to raise money if things ever get tough, and at a maximum, I think pushing his teams to get to some of those. Like, I agree with you. Autonomy is not going to come whenever we think it is. I think it's probably 2027. It's probably not going to be in 2027. But I mean, that he's a huge asset, and I think he's going to continue to have Tesla as one of his top focus areas.
Yeah. Well, we'll leave it on that note, because I think you're in good company on that front, and I just seem like a little whiny, you know what, when I go off on that. All right, Gene, I really appreciate you being here. We covered a lot of ground. We got to kind of go back and forth on a lot of stuff, and I always appreciate your candor and your willingness to play in this sandbox. So thanks so much.
A lot of fun. Thanks, and we'll see you soon.
All right. Well, that was Gene Munster of Deepwater Asset Management. I hope you'll be back really soon, and I'm sure I'm going to see you this week on Fast Money, Gene.
Can't wait.
All right. See ya.